come all out of the blue. So first it was the capital gains tax announcement, and then now global meltdown thanks to rising interest rates in the US. There will be valuation correction, but there's very little that one can do with respect to valuations per se. I think in these sort of times when stocks are falling like 9 pence, a patient investor would actually love these moments to accumulate the favorite stocks that he would have liked to buy just a week ago. So my sense is whenever there's blood on the street, it's always advisable to buy fundamentally sound stocks. Having said that, markets still can go down by 10% from these levels. But from a 2 to 3 year perspective, since the earning cycle is now starting to pick up, be very picky and choosy about the stocks you buy. And wherever, there are umpteen number of stocks where you have visibility of 15, 20, 25% growth for the next 2, 3 years. In these sort of times, you get them at a reasonable valuation than what it was, let's say, just 7 to 10 days ago. It's always advisable to go out and buy. As far as our investments are concerned, whatever flows we are getting, we are looking at buying even in downturns, but we want to be buying only those scripts which we want to buy, not the every stock that is there on the street. But yes, the valuations were frothy in the mid cap and small cap space. They will have room for correction. Markets will become far more rational.
Right, Manish, what a lot of viewers will want to know from you is that will you buy today? Would you advocate buying today? And we are staring at a gap down of 3.5% on the index, taking us to perhaps the floor of 10,000. And who knows, today's session things could intensify as well. Would that be a chance to buy?
100%. I mean, we don't take cash calls. Whatever flows we would be getting, we'll be deploying in the markets. Whatever stocks we have been buying, and we'll buy them in today. So irrespective of whether markets fall 5%, 7%, 10% from these levels, we will be looking to buy from an investment horizon of next 2 to 3 years.
The correction is just about started. Do you think the cut could be deeper? And fundamentally speaking, if the markets were, let's say, 15, 17% higher than the normal historical valuations, do you think the correction could be deeper and sharper? So you should be a buyer, but one should not be a buyer, let's say, today and tomorrow.
No, but please bear in mind, Nikunj, that the mid caps and small caps have fallen 10 to 20% and some even more. We are talking about headline cuts of maybe 2 to 5%, maybe 11,000 something, 11,200, and maybe we are at 10,500 or thereabouts. So, in any case, the headline numbers, which is the BSE 30 or the Nifty 50, were not that overtly overvalued, when it comes to the large caps. But the cut has been far deeper in the case of mid cap and small caps, even as the headline numbers have not fallen that much. Having said that, since the correction has already taken shape much before the global meltdown, as far as India is concerned, that much of less damage will happen in the Indian stocks, from a global standpoint. So if, let's say, the headline numbers would be correcting by 5 to 10% from these levels, I mean, the damage on the mid cap and small cap would get mitigated to the extent that they have already fallen.
Hi, morning. Aisha also joining into the conversation. It's so soothing to hear your voice because you're the first one who's come out and say, start preparing that buying list. It's time to buy and not really throw in the towel and sell out of the market. So the point, Manish, is what is it that you buy? Do you buy more of the mid and the small caps because it doesn't seem like the selling is quite done there? Or do you stick to large caps right now because that's where quality is pointing towards, lesser leverage, and it seems that their fall could be arrested sooner than mid and small caps?
I said buy anything, buy large cap, mid cap, small cap, whatever you want to buy quality stocks, buy stocks which have earnings visibility of 15, 20, 25% over the next 2, 3 years. If you believe in the India story for the next 2, 3 years, 2019 and beyond, I mean, these are golden moments for one to come out and, do a shopping when there's a fire sale in the markets per se. I mean, everybody wanted to buy this 10 days back. What has fundamentally changed, just within a matter of 10 days? Yes, valuations have corrected. But everybody knew that the valuations were good and rich, 7 to 10 days ago. Valuations are correcting. But, if valuations were frothy, growth can take care of valuations. But you'll have to give the company some time. So if you are sure about the numbers and the earnings of the companies, which you always wanted to buy 10 days ago, I mean, there's always reason to buy even now.